Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market wind up relatively flat, up 0.19%. We are still up year to date, 6.94%, up now from the highs that we saw in February, 2.88%, and then up from the lows that we saw in March, 55.71%. So this week, the main two market movers is that we had the roller coaster ride, or the continued roller coaster ride of whether or not we're going to receive stimulus, yes or no, going back and forth. And then we also did see a pretty hefty jump in retail sales that surprised the market on Friday. So Rich, let's first talk about the stimulus package that Monday sounded like we were going to get something before the election. Market rose, and then the next day, everything seemed like we're not going to get a stimulus, and then the market fell. So what's going on there?
Yes, well, basically, what we're seeing is everyone, economists, investors, even politicians, understand that we need another stimulus bill. Unfortunately, both the Democrats and the Republicans are trying to figure out what is better for them rather than what's best for the economy. And there's a game of chicken going on. It looks as if the market has made a decision that no matter who gets elected president and no matter which party's in control of Congress, or even if it's split, there's going to be a stimulus package. The question is whether it's before the election, which looks very unlikely at the moment, after the election, and before 2021, or in the early part of January of 2021. And that's the only issue that's really unknown at this point. And that's sort of why the market went up, down, and then basically has now gone flat for today.
Yeah, so we're going to continue with the little market news and the news that comes out around stimulus probably for the next month. It'll continue to have large impacts on what we see in the market.
Absolutely.
Well, then the next kind of big surprise and what led to the start of a really strong day on Friday were the jump in retail sales. So we've obviously talked about the whole coronavirus economy, and one of the expectations was that retail was supposed to get drastically hit, which it was, but now we're seeing it start to come back, and in some cases actually be better than it was pre-COVID.
Absolutely.
Rich, what are your thoughts on that?
Well, what we're seeing is that a lot of the hunkering down that's been occurring, people are starting to buy things that they need for their homes, and they're looking more long term. So we're seeing more larger retail purchases as people who have jobs can make an assessment: is the coronavirus and the pandemic going to harm them? And for 80% of the population, it's not having a negative effect. For 20% of the population, it is. And we're seeing that 80% are now making larger purchases, including vehicles, so that they can drive to vacation places and RVs and campers.
Well, thank you. So going forward, it'll be interesting to see. Obviously, big tech comes out with their earnings next week, and we'll be able to see FANG specifically how they've done. Obviously, they did incredible last quarter while the rest of the market was struggling. There's some pretty big expectations on them for this next week. So it'll be nice to see if they either exceed expectations or not. Either way, thank you for joining us this week. Yeah, as we always say, we're here to support you. Your money's here to support you. If you have any questions, please reach out to us. and we'll see you again next week.